Okay, so we've got some more news regarding tax policy changes out of the Trump administration. So, the latest one that is making the rounds here is President Trump wants to make auto loan interest on your vehicle tax deductible so long as the vehicle was made in America. So, we've got an article here out of Yahoo News, which does a pretty good job at summarizing some of the key points. So, we'll have a look at it and then discuss, what the potential impact is for most taxpayers. So, President Trump reiterated this claim. He made it multiple times during his campaign tour, going around talking about changes he would make, and this was one of those that he mentioned a couple times. So, during his speech in front of the joint session of Congress, he reiterated his promise to make interest on car loans tax deductible, but only if the vehicle is made in America. Now, auto loan interest can be tax deductible already if the vehicle is being used in your business, but for personal automobiles, personal loan interest is not tax deductible. Now, the idea here is widely seen as a lemon among tax policy experts, who view it more as a gimmicky carve out, depending on how it's structured, and it could disproportionately benefit well-off Americans that have expensive vehicles. So our friends over at the Tax Foundation, Alan Cole, who's one of their senior economists, he has labeled it a C- or a D+ proposal, so he's not happy about it. But the reality is we don't have any real details yet on how this would work. He's just kind of throwing it out there. But they've done an analysis so far over at the Tax Foundation, kind of estimating what they think the cost would be to the U.S. government and how this might work for taxpayers that have to actually file their tax return. Now, auto loan interest, it's important to remember that it can be deductible if your car is being used in a trade or business. Right now, if it's purely a personal vehicle, there's no deductibility for interest expense on an auto loan. There are certain tax credits that might be able to save you some money. So if you buy an electric vehicle, you might get an EV credit. But largely, for the most part, personal loan interest, interest paid on personal automobile loans, that is not going to be tax deductible. So the Tax Foundation prepared a report, and they estimated that auto loan interest deductible for people who itemize their taxes will cost about $61 billion over a 10-year period. So it is a lot of money. That's a lot of money that the federal government wouldn't be able to receive over that 10 years. And that's assuming that the auto loan interest would be an itemized tax deduction. Now, as I highlight here, the benefit would only go to a narrow slice of Americans. Only 1 in 10 taxpayers actually itemize. And that's true, right? Most taxpayers, even if you have itemized deductions, so even if you have a mortgage, you pay property taxes, you have charitable contributions, most taxpayers, when they add those amounts up, it doesn't exceed the standard deduction that's available on your return. And so most people will just take a standard deduction, which is why only 1 out of 10 returns actually claim itemized deductions. Now, the proposal would be pricier if it were structured as an above-the-line deduction. And that would be available to all taxpayers regardless of whether or not they itemize. And so the above-the-line deduction, an example we see existing already is student loan interest. So student loan interest is an above-the-line deduction. So you don't have to itemize in order to deduct student loan interest. Now, student loan interest is a bit tricky because there is a cap. It's $2,500 a year. And if you are making money over certain thresholds, the amount that you can deduct is even reduced further. And so there's a lot of taxpayers that are making good money that have student loan payments, and they're not even able to deduct even $1 of student loan interest because of the phase outs. So if it's structured as an above the line deduction, they calculate that it would be $10 billion a year, so $100 billion a year instead of $60 billion. $10 billion a year, so $100 billion over a 10-year period, rather than the $60 billion if it was an itemized tax deduction. Now, how much could car buyers save? So they've got a report here out of Experience saying that the average new car loan was about $41,000 at a 6.8% rate. So a 60-month loan would be $870 monthly car payment, and the first year would be $2,568 of interest. So remember, car loans, like a lot of loans, mortgages, the interest is front loaded, right? So you're paying more interest in the early years, and as you start to chip away at the principal balance, you're making more payments towards principal in the later years than you are in the earlier ones. So question is whether these policies on the whole would make cars more affordable is a different issue, right? That's the other thing, is now that there's a lot of tariffs being imposed on automobiles, even if you can deduct the interest expense, if the price goes up exponentially because of the tariff, well, you might be in the same place or maybe even worse off than you would be if there were no changes. So again, so far, there's no details that have been released by the administration as far as a plan that they put together as to how this would actually work. So it is hard to really, be critical of it or favor the proposal because we just have no real information. Again, they've just kind of throw it out there as, well, if you buy a car in the U.S. and it was made in the U.S., you can write off some of the interest costs on your taxes. So another one piece of the proposal to keep a track of, we certainly will monitor it. And if there's any more meaningful literature that comes out of the administration that tells you exactly how it's going to look, then we'll certainly keep you updated. But for now, this is just one of the many ideas that are being floated out of the Trump administration about modifying the tax code to try to, their aim is certainly to try to help individuals save more money on their taxes. But this might be one of those things that for most people, this might have little to no benefit whatsoever, but we'll have to wait and see. So that covers it for this update. Hope that was helpful. And as always, I appreciate you watching, and I look forward to seeing you on the next update. Thank you.